Welcome, curious minds, to another deep dive. Today, we're really plunging into the latest financials from SBI Life Insurance Company, Ltd. That's for the quarter ending June 30th, 2025. We've got the press release, the investor presentation, the audited results, quite a stack. Our mission, as always, is to cut through the jargon, find the key takeaways, and really understand what this means for a major insurer like SBI Life and, well, for your understanding of financial security today.
Absolutely. And what's really interesting, I think, is how these numbers aren't just numbers. They paint a picture. A picture of the company, sure, but also, broader trends in India's economy and society. We'll look at the key indicators, their strategy, and how it all connects to that bigger story. So yeah, let's get into it.
Okay, let's kick off with the main headlines for Q1. What are the figures that, immediately jump out, the ones that tell a story straight away? Because I'm seeing some pretty robust growth figures here.
You definitely are. I mean, top line, profit after tax, PIT, that's up a solid 14% year over year, hit 5.9 billion. Gross written premium, GWP, also claimed 14% to euro 178.1 billion. And assets under management, AOM, impressive 15% growth, reaching 4.8 trillion. But for me, the really striking number, the one that signals something significant is changing, it's that 73% growth in individual new business sum assured. That's 666.3 billion.
Wow, hold on, 73%. That's huge. What does a jump like that really tell us about the market? Is it just SBI Life, or is something bigger happening? Like, are people genuinely thinking more about protection?
Exactly. It's a very powerful signal. It's not just a blip. It suggests customers in India are shifting, moving beyond just savings to actively protecting their future, buying peace of mind, which is frankly a sign of a maturing market. And alongside that, you see the annualized premium equivalent, APE, up a healthy 9% to 39.7 billion. The value of new business, VNB, basically future profits from new sales, that increased 12% to 10.9 billion. Strong margin there too, 27.4%. Even their Indian embedded value, IEV, which is a broader measure of shareholder value, grew 20% to 742.6 billion. And crucially, these aren't just internal numbers. The financials were audited, the embedded value checked by actuaries, all approved by the board today, July 24th, with an unmodified opinion. That adds real weight.
That consistency, especially in sum assured, is really interesting. Okay, digging in a bit. The MD mentioned a favorable shift in product mix. Right. So from a customer's angle, what does that actually mean? Are the products changing?
It's a significant shift, yes, and it's absolutely about meeting customer needs better. Historically, maybe insurance was seen more as just an investment, but this focus now towards protection solutions and guaranteed non-par savings means customers get more predictability on savings and, critically, a stronger safety net. Just look at the protection new business premium, 9.8 billion this quarter. That's part of a 27% compound annual growth rate since Q1 FY21. That's sustained growth.
So it sounds like they're really tuning into that need for security first. How does that break down across their portfolio?
Precisely. If you looked at the APE mix, it's 57% ULAPs, 38% non-participating, and just 5% participating. And while, yes, individual savings grew 2% and annuity grew 8%, the clear direction is diversification. They call it a basket of products, covering everything from kids' education to retirement, wealth creation, family protection, different products for different life stages, different needs. And this approach seems to be working. They've kept their leadership spot in the private market for individual rated premium, IRP, at 22.3%, and individual new business premium, NDA NBP, at 25%. It suggests a move towards more stable, predictable revenues, which fits that customer-first idea they talk about.
Okay, so the products are adapting. But how are they actually reaching people? I mean, India is vast. I hear about this huge distribution network, but also serious digital efforts. What's the scale we're talking about?
Oh, the scale is immense. You've got over 323,000 trained professionals, agents, CIFs, SPs, spread across nearly 1,150 offices countrywide, and the channel mix for APE. Bank assurance, the bank partnerships dominates at 58%, agency is 27%, others 15%. It's a multi-pronged approach.
And the digital side, I saw a stat, something like almost all individual applications are digital now. That seems incredible for India. What does that feel like for the customer?
It's pretty revolutionary, honestly. Think less paperwork, faster processing, quicker service overall. They really are walking the talk on being digital first. 99.3% of individual applications submitted digitally. That's market leading. And it's not just efficiency for them. It makes insurance much more accessible, less hassle for you, the customer. You see it in the service metrics, too. High claim settlement ratio, 98.4%. Very few grievances, only 5 per 10,000 policies. They're using tech smartly. Hundreds of PA bots automating tasks, plus direct digital engagement. WhatsApp service for over 800,000 customers, hundreds of thousands of audio and video welcome calls after purchase.
PIWC calls, right?
Exactly, the pre-issuance welcome calls. Even onboarding advisors is 100% paperless. And get this, 97% of renewal premiums are collected digitally. It just shows this deep commitment to using tech for a smooth end-to-end experience.
So digital's clearly a massive lever. But what about the underlying financial health? How efficient are they running things? And how safe are those trillions in assets they manage?
Right, crucial questions for any insurer. Cost-wise, the total cost ratio was 10.8% this quarter. Pretty disciplined. Operating expense at 6.3%, commission stable at 4.4%. But what's really encouraging is the improvement in persistency ratios.
Okay, explain persistency quickly for us. What does that actually tell you?
Persistency basically measures how many customers stick with their policies year after year. It's a direct indicator of customer satisfaction and the quality of the business they're writing. So seeing their 13th month persistency improve to 87.12%, that's good. But the 61st month, so 5 years out, improving by over 500 basis points to 62.88%.
That's excellent. It means people are seeing long-term value.
Okay, so customers are sticking around. What about their financial cushion? Very strong. Their solvency ratio is 1.96. The regulatory minimum is 1.50 years, so they have nearly double the required capital buffer. That provides immense security for policyholders, even if things get rough economically. Their net worth is up 15% to $178.3 billion. They highlight being a zero-debt company with healthy reserves.
That's definitely reassuring. And the investments behind that huge AUM, the $4.8 trillion, how's that managed?
Prudently. It's about a 60.4 debt-to-equity mix. And importantly, within the debt portion, around 94% is invested in top-rated AAA or sovereign instruments. Very low credit risk. This careful risk management ensures stability. And the yields are decent, too. 8.73% for the policyholders fund, 8.15% for the shareholders. So you put it all together, better persistency, strong solvency, safe investments. It paints a picture of a very well-managed, stable company built for the long haul, essential for insurance.
Absolutely. Now let's zoom out a bit. This performance isn't happening in a vacuum, right? India's whole economic story seems to be providing some major tailwinds for the insurance sector.
Yeah.
How does that play into SBI Life's success?
Oh, enormously. India has these incredible demographic advantages. Huge working-age population, rapid urbanization, rising incomes, focus on financial inclusion. It's one of the youngest countries globally, median age just 28. That's a massive potential customer base for decades to come. And forecasts reflect this. Swiss Re expects Indian insurance premiums to grow 9% annually in real terms over the next decade. We're already the 9th largest life market globally, projected to be 5th by 2032.
That's incredible momentum. But I also read that insurance penetration, like the percentage of people with insurance, is still quite low compared to similar economies?
Exactly. That's the key point. Penetration is only around 3%. Compare that to, say, Thailand at 4% or Malaysia at 7%. So despite the growth, there's still immense untapped potential, huge room to grow. We're also seeing rising demand for retirement products, annuities driven by longer lifespans. Life expectancy at 60 is projected to be 19 years for men, 22 for women by 2030. Yet India's pension assets relative to GDP are low, just 3.1%. Again, massive growth potential. And economically, India is set to be the fastest-growing G20 economy, maybe 6.6% GDP growth annually through 2028. Household savings are rising, expected to double in 5 years. It's a confluence of factors that puts companies like SBI Life in a really strong position to capitalize on this unfolding growth story.
Okay, so the macro picture is definitely favorable. But beyond the financials and market share, there's the whole ESG aspect, environmental, social, governance. Is SBI Life just ticking boxes here, or is it genuinely part of their strategy? And how's their corporate governance shaping up?
You know, what struck me reading their materials is the level of detail and integration. It doesn't feel like an add-on. Take environmental 100% renewable energy for corporate offices, tracking emissions across scopes, rainwater harvesting, significant waste recycling figures like thousands of kilos of e-waste and paper. These aren't just aspirational statements. They seem to be operational practices.
Okay, so tangible actions on the E. What about the S, the social impact, and the G, governance?
Socially, their CSR spending is substantial, focusing on healthcare and education, reaching tens of thousands directly. But also, financial inclusion is core to their business model. serving over 52 million under the PMJJBY government scheme, millions more via microinsurance, hundreds of thousands of new policies in rural areas just last year. Internally, they have initiatives like Project Shakti, boosting women advisors to 37%, offering crash facilities. It's about broader impact. And governance. A high percentage of independent directors on the board, 62.5%, including a woman director. Key committees chaired by independents. That structure promotes accountability. Plus, they have key ISO certifications for information security and business continuity.
Important ones, yeah.
Crucially, they reported zero complaints on data privacy or cybersecurity breaches. In today's world, that's significant. So yes, I think the transparency and the breadth of these ESG initiatives point towards a mature understanding that this isn't just nice to have, it's fundamental to building long-term trust and value.
Well, that really has been a deep dive into SBI Life's Q1 FY26. We've seen strong financials, a smart shift in products towards protection, this incredible scale in distribution, married with impressive digital capability, robust financial health, and all set against that backdrop of India's growth potential, plus a clear focus on ESG.
Indeed, it's a picture of a company that seems to be navigating a very dynamic market effectively, focusing on long-term stability and, importantly, customer value and security.
So thinking about all this, what does it mean for your understanding of financial security's future? As India keeps growing, as demographics shift, how might companies like SBI Life continue to innovate? How will they meet those evolving needs, balancing that amazing digital efficiency we talked about with the need for, real personalized human connection in the years ahead? Something to think about. We hope this dive gave you some useful insights, maybe a few aha moments. Until next time, keep digging into what truly matters.